Hey folks, thanks for tuning in to our MMG weekly recap. Here we are on a Thursday, and we're going to wrap up the week with a little bit of tailwinds from abroad. The ECB raised rates surprisingly by 50 basis points, which was 25 basis points more than expected. And it created a little bit of chaos. Why? Well, first off, the ECB got out of the negative interest rate experiment. So their benchmark interest rate is now just zero. But what that did is it elevated recession fears over in that part of the globe by a lot. And a couple of things happen when you have a recession. Number one, energy prices come down. We watched oil drop $4 as we're speaking, beneath $100, which is a good thing. The other thing it did is it creates that safe haven trade into the US dollar treasury market and our bond market. And so in response to the ECB's actions, we watched a complete 180 in the bond market with rates improving nicely. So now we're on the march to the Fed. Next week, the Fed will raise rates by 75 basis points. It'll be the first back-to-back 75 basis point hike since 1980. So it's been a while, right? And so we got to remind ourselves what happened last time, because when the Fed raised rates back in June by 75 basis points, we watched long-term rates peak. 10-year note hit 349 and it has improved really ever since. And here we are at 295 heading into the weekend. So there's a lot to track. Obviously, we had housing data this week, which the Fed wanted to cool off. Check. That started to cool off. The Fed wants to create a little bit of unemployment. We're starting to see initial jobless claims show that the unemployment line is growing. So there's a lot that we have to track. I hope this finds you well. Have a great weekend. Be safe, and we'll talk to you soon. Bye for now.